In this video, we'll learn about two high probability market entries that can give you 50 pips per entry. Make sure you stick up to the end to fully understand. So basically these entries comes at these points of market structure, at the ultimate reversal point or within the trend. So stick up to the end so that you fully comprehend how to catch these particular entries. Before we talk about anything else, I just want to make this clear. If you look back to your 2023 trading statement or results, how do you feel? Be honest about it. Imagine the money you could have made if you focused on one or two proven setups in that particular trading year. Well, I'm saying this to clear the thought that obscure your trading vision. We tend to feel left behind if we do not get a proper trade. If 2 or 3 days passes without buying or selling in pair, we start to force trades. I've seen several traders doing this particular mistake. If 1 or 2 days passes, they feel as if they have been left behind or as if the market will never give them a proper trading opportunity and try to force things. If we see someone on social media flipping very small accounts, we try to do the same. But have you ever asked yourself, how many times has that person done that flipping over a long period of time? You'd see someone can take 1,000 to 5,000 or $100 to 1,000 in 2 days or 3 days. But have you ever asked yourself that if these people could do the same, would they still be trading? Because they will be rich and they would have all the money in the world. My brother, my sister, professional trading requires more than patience. And these setups we will talk about require this patience. And on any other topic or any other trading setup, you will always require patience. That's the nature of this business. So our first trade type is, we call it the entry type A. Our entry type A is called the peak trade. It is a counter trade where the market cycle governs the entry point. We locate this particular entry at the end of a cycle. By cycle, we are saying, or we are talking about levels being completed. We need to see 1, 2, and 3. These being either days of rises or impulses or weeks of rises. So we are saying at the end of a cycle, that is where we expect the entry type A. And the parameters of the entry are the market cycle must be complete, meaning we should have 1, 2, and 3 levels or impulses of rise. You must see the market issuing a reversal in any session, right? The first reversal that we are implying to is after we have a completed cycle, we need to see a reversal, right? So this reversal is the one that forms the basis of the first leg of an M pattern. Entry will be made at retest of the first reversal, but must be in a different session. So let's say this reversal has been issued in London. We expect to see a retest of the same price within the US session. But watch out, we are not going to just enter blindly at the retest of this price because the market makers actually passes through most of the times. Why do they do so? So in institutional trading, when I actually got a chance to see a few parameters of how institutional trading is. In institutional trading, we do not just press buy or sell. We need to actually make our liquidity for us to get an entry point. What am I saying? We have to create an entry opportunity for us to sell, otherwise the market may collapse or we may lose a lot of money. So the market makers will need to induce so that the market actually has the enough liquidity for them to make an entry. So we do not just enter blindly at the first leg retest, but we need to see rejection behavior at this zone for us to make an entry. A candlestick reversal pattern is a very good thing to see before we make a decision. Here's the illustration of this particular trade setup. We have 1, 2, 3. The cycle is completed. As I have said, these are days of drop or impulses or any time frame of drop. If you do not understand how to count these levels, please refer to our channel. There is a video that actually teaches you how to count these impulses. Then at this third impulse, we expect to see a cycle completing, which will issue a reversal setup, actually the first leg of the W pattern in this case. Then a retest of this first leg price, that is where we start to find entry points or to find reasons for entering the market. At 50 pips, that is where we should look to target. Entry type B. This now is a trend trade that is obtained from a fully validated reversal point. We were talking about entry type A, but in some cases, entry type A may be difficult for someone, so it will be better for you to focus on entry type B. For the sake of this video, we will not go through how to validate a reversal point. We've actually done a video on that. And entry type B can be nicknamed double tops and bottoms inside trend. What do we mean about this? We actually are saying we have made a trend. So we are saying these are double tops or double bottoms within a trend that has already been set. So parameters of this type of entry are M's and W's away from a validated peak. The patterns must fall within the London and New York session except the Asian active pairs like the yen, the Chinese yuan, Australian dollar, New Zealand dollar, and so forth. Let's now see an illustration of this particular trade entry. In this case, we can see that we are coming from a validated example, peak. Then from there, the M pattern must be away from these validated peaks. The M pattern can be varied for us to see it as a three-legged pattern. However, as I said earlier before, these particular trade entries requires a patience for them to form in front of you. But if you focus on those, you'd see that you manage to get 2 to 4 trades per week, or even 1 trade or 2 trades per week, but they'll be very, very good if you do them properly. Let's now have chart examples, but before we go there, check out our free Telegram channel. It's actually we are actually sharing free signals in this Telegram channel. I'll leave the link in the description box below. So this is euro against CAD. I'm just going to illustrate the type of entries that we're talking about on the slides. The first one is entry type M pattern, which looks like this. In the real markets, it will not be as perfect as we expect it to be. In this case, we had the first leg price. The other legs couldn't come back and retest the first leg price. Therefore, these ones were actually invalid points of entry until we got a spike to the first leg price. Let me zoom in so that you can see properly, right? First leg consolidation, then spike to the first leg price, and we made our entry. Then the entry type B can be seen clearly if we are on the M15 time frame. We need to be on the M15 time frame for us to see those ones clearly. So in this case, we can see that we had the first leg, and then the second leg was now out of the trading sessions. It was now within the period that we call the dead zone between US close and Asian opening. And then they actually issued the third leg. Therefore, we had 1, 2, and then at the third leg, that is where we met, or we actually met our validating rules, and the market went our way. In this case, we actually had another entry type A where we had first leg, Then the second leg in a different session coming to shoot beyond the first leg, and then it actually went up. Then we started our count again. 1, at this point we expected to see entry type B. Unfortunately, the market did not issue that. Then 2, and then 3. At this point we had the first reversal point, retest of the first reversal point, and then the market actually went down. So from this point we can see that we had 50 pips that we are looking for within our entries. So from there we had 50 pips, and unfortunately or fortunately enough, the market gave us another point of possible entry because it was now a 3-legged pattern, which also gave us an entry point to the downside. So in this case, we were actually expecting to see a pattern for us to go in a downward move like this. However, the market actually issued such a pattern, which is not on our rules of validation. So wait to see how the market will react so that we get the actual points of entry. So just a tip I want to leave with you: whenever you want to press the buy or sell, make sure you ask yourself, what type of pattern am I entering? If you do not have an answer for that question, it's better to sit on your hands. That way you actually save a lot of money and actually able to make a lot of money. On that note, we come to the end of this video. See you on the next one.